Ladies and gentlemen, good day and welcome to Prince Pipes and Fittings Limited conference call to discuss the acquisition of Bathware brand Aquel, hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Arun Baid from ICICI Securities. Thank you, and over to you, Mr. Baid.
Thank you, Michelle. Good morning, ladies and gentlemen. On behalf of ICICI Securities, I welcome you all to the conference call of acquisition of brand Aquel by Prince Pipes. From the management side, we have Neha Chheda, VP Strategy, Anand Gupta, CFO, and Carl, Head IR Relationships. Now I hand over the call to Neha for opening remarks, post which we'll have the Q&A. Over to you, Neha.
Thank you, Arun. Morning, everyone, and thank you for attending our conference call to discuss our purchase of the Aquel brand as well as their state-of-the-art manufacturing facility at Bhuj, Gujarat. Since our launch, I have been visiting the market with my team to interact with various market stakeholders like distributors, architects, and builders. And while the overall reception to our bathware foray was taken positively, one strong feedback that we received is that we need to have a known bathware brand which would serve as a platform to accelerate the growth of the bathware segment. I am happy to share with you that our purchase of the iconic bathware brand Aquel and its manufacturing facility at Gujarat is complete. Aquel has been a pioneer brand known for quality, innovation, and a focus on technology, which is far ahead of its time. It is actually the first brand in the industry to introduce special colored faucets to the Indian markets, which are currently high in demand. Along with this, they are also first movers to introduce many new innovative bathware SKUs like diverters and mouth operating cocks, which have now become an integral part of India's bathware industry. As a result of which, today the Aquel brand resonates with ahead of the curve innovation and a clear focus on quality. Aquel gives us a platform to accelerate our go-to-market approach for our newly launched bathware business. Furthermore, the manufacturing facility at Bhuj is highly advanced as it is the first company in the industry to use robotic equipment to automate the critical processes of electroplating as well as grinding. While even the incumbent has only actually just started using robotics for these processes only in the last few years. These are just a few examples of Aquel's manufacturing prowess. The total land bank is approximately 8 acres, which can also be used for future expansion because the current manufacturing area spans around 2.5 acres, which is less than 1/3 of the overall land parcel. The installed capacities at the unit can produce about 1 lakh pieces per year, leading to a revenue potential of 100 to 120 crores per annum. In a fast transforming market led by changing customer needs and style preferences, Aquel has established itself with a comprehensive range of products and a prominent brand identity in western, central, and parts of southern India. It has built a very strong brand equity amongst homeowners, architects, and builders. Their range of scientifically engineered products encompasses faucets and bathroom accessories across 9 ranges and more than 250 SKUs, which will be integrated into our existing ranges to have a formidable range at different price points. Our bathware portfolio will hence be branded and retailed under Aquel by Prince brand once the existing inventory is cleared. We will also have access to the distribution of Aquel across India helping us expand presence instantly. Now, to give you an overview of the deal, we have signed an asset purchase agreement with Klaus Warren Fixtures Private Limited for 55 crores. The acquisition will be funded through internal accruals. The asset purchase is structured in 2 tranches. In the first phase, we completed the acquisition and assignment of the Aquel brand, as well as the associated molds and dyes on an immediate basis. This is to ensure that our market development activities, as well as the sales engine, can begin to fire immediately. The second phase will be the acquisition of the balance manufacturing unit, comprising land, building, as well as the manufacturing equipment situated in Bhuj, Gujarat, which will be completed over the next few months, basis the regulatory approvals. The advisors for the transaction are Deloitte for financials. Technical assessment was done by Knight Frank, and Luthra & Luthra Partners did the legal due diligence. The combination of Aquel's state-of-the-art plant, modern manufacturing processes, and rigorous quality control infrastructure, along with Prince's operational prowess, will help us scale the bathware business. This acquisition also represents a strategic alignment that promises substantial synergies in the future. As you all know, at Prince, we have had a risk appetite for a combination of organic and inorganic growth in the past. We have been extremely selective and prudent while using the inorganic path. In 2012, as you know, we acquired 2 manufacturing units at Chennai and Kolhapur from the Chemplast Sanmar Group, which helped us strengthen our presence for the pipes business in southern India. Hence, this is the second time we have used the inorganic path to accelerate our growth into a newer, unexplored market for us. Prince is in the process of building multiple levers of growth that will boost our growth to become a stronger and more resilient enterprise. With this acquisition, the overall addressable market for Prince would be spread over 60,000 crores, pipes being 40,000 crores, water tanks being 6,000 crores, and now the bathware segment being 15 to 20,000 crores. We are taking definite strides towards our vision of transforming our country's water infrastructure. As you are aware, out of the total 15 to 20,000 crores of market size for the bathware segment, 65% is organized and 35% is unorganized. It is a segment where value addition is the most prominent. Product, innovation, and ability to distinguish by service are key differentiators in this business, which will help us create more value. With this acquisition, we will be using the strong brand value of Aquel and its product line to expand our presence. In the long term, this will be the most profitable business out of the 3 verticals. It will elevate the performance of our bathware division, granting us direct access to 1, an esteemed brand, 2, a state-of-the-art manufacturing facility, and 3, a deeply entrenched distribution channel in key markets. You all are aware that we are aggressively expanding capacities across not only bathware business, but also in our core business of pipes and water tanks. In our core business, which is the pipes and fitting segment, we continue to invest in expanding our manufacturing capacities, product portfolio, and advertising investments. The Indian real estate industry is expected to grow aggressively over the next few years, and our plan is to not only participate but also contribute towards this growth via our 3 business verticals of pipes, tanks, and bathware. The water tank segment has been growing steadily for us. We have been expanding our in-house manufacturing footprint. We started manufacturing with Silvas in July 20, then Jaipur in May 22, Telangana in June 22, Haridwar in Feb 24, and now we would be starting manufacturing for water tanks at Chennai in the next few quarters. This will help us leverage our multi-location manufacturing network to scale the tanks business going forward. To also update on our capacity expansion in the pipe segment for the eastern market, where we see a robust opportunity, we have increased the proposed capex in our Bihar facility to 220 crores. This is because we have increased the capacity that we are putting up in Bihar from earlier 35,000 metric tons to now 48,000 metric tons. This is because we have preponed the fitting capacity in phase 1. Furthermore, in Bihar, we will also be putting up water tanks capacity, which is estimated to be at 60 lakh liters per month. With this, Bihar will be one of our largest plants and will cater to demand in East India, which is a major frontier of growth for the nation as well as for Prince Pipes. We expect to commercialize Bihar in Q4 of next fiscal. The current fiscal actually has not been the easiest for us. The ERP transition did lead to lower volume growth. But I would like to highlight that while we have had one eye on addressing short-term challenges, which are now behind us, we have still kept the other eye on focus of long-term inorganic strategy, which enables us to unlock major value over the long run. I am sure that it is evident that in a rapidly growing Indian bathware market, the Aquel acquisition helps us stand out at the very top of the pyramid in terms of brand recall and will seamlessly align with Prince's ambitious growth. With that, we open the floor for questions and are happy to share our thoughts to your queries.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touch-tone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aquel from JM Financial. Please go ahead.
Yeah, good morning, team. Thank you for the opportunity. Congratulations for the acquisition. Nihar, if you could help us understand, for this facility, what kind of earnings the earlier owners kind of derive from this facility, if you could guide that. And also, secondly, what is the replacement cost of this size and scale of this particular plant?
Yeah, thank you, Aquel. So I'll take the, in terms of the revenue, currently is extremely low because the company, Klaus Warren, is going through major balance sheet constraints for a few years. And despite having a strong order book from their distribution network, they were not able to supply the material because of working capital issues. And this actually only worsened in the COVID period. So currently, I think revenues of last fiscal would be around 7 crores. But what's important is that there is a strong order book from the distributors. And now with our financial muscle, we will be able to streamline supply, give that supply security to the channel, to not only our existing channel, but also to Aquel's channel, which will help us accelerate the kind of scale that we want in bathware. So I think more important than the current revenue, because I don't think that's relevant because of the working capital issues. But now with our ability to timely supply and infuse that kind of working capital, I think we will be able to really justify the kind of sales a brand like Aquel should be having. I think more than a decade ago that they did have revenues of close to 40 to 50 crores 10 years ago. So that shows the kind of sales that can be derived from this kind of a brand platform. And I think second question was replacement cost. So I think since the revenue potential is around 100 to 120 crores and a capacity of around 1 lakh pieces per annum, I think similarly, to put up similar capacity, you would need an investment of 35 to 40 crores. So at the current price, I think it's an extremely lucrative deal for us, given that we also now have access to brand and distribution.
Got it. If you could guide in terms of what is the current number of dealers, retailers Aquel has, and what is your tally before this acquisition?
So before this acquisition, we currently have 25 to 30 active distributors for Bathware.
Okay.
And Aquel has around active distributors because of the supply security. They were prioritizing only the larger distributors, which now will not be the case. We will be able to supply material to some of the smaller inactive distributors and help them grow with us over time, and then eventually become large distributors for us in the long run. But currently, the relevant distributors for Aquel would be around 30 to 35.
Understood. And, what is the non-compete in terms of the years, any particular clauses you can highlight with the promoters? And will the promoters be involved, or are they completely out?
So promoters will be out of this business, Achal, and the non-compete is for 10 years on the paper, but anyways, they have planned to exit this business as a whole. Otherwise, they would have continued on this brand, but since they want to focus on other areas where they are actively engaged, they are completely out of this business.
Understood. I have more questions, but I'll fall back in the queue. Thank you so much, Anand.
Sure.
Thank you. Participants who wishes to ask questions may press star and one now. The next question is from the line of Shubham Agarwal from Axis Capital. Please go ahead.
Hi, I'm audible?
Yes, sir, you're audible.
Perfect. Thanks for the opportunity and congratulations for the acquisition. Just a few questions from me. So, in the asset purchase agreement, I just wanted to get a sense, what is the cost of the 8-acre land parcel? Or rather, what is the fair value of the 8-acre land parcel? That's one.
Shubham, the land parcel is 8 acres and the fair value is between 8 to 10 crores. That's the market value. But for the purpose of valuation, we have taken the rate based on the circle rate of that place, and that is close to 4 crores.
Okay, got it. And secondly, would you be, and the asset turns in a faucet manufacturing facility, is it generally in the range of 4x at least, 4 to 6x? Is that understanding correct, or how does it?
It's generally 3 to 4x.
Right, so for 100 crore revenue, the replacement cost should ideally be in the range of 25 odd crores.
So the revenue potential is 100 to 120 crores.
Right.
So the replacement cost would be 35 to 40 crores.
Okay, got it. And just if you could also give a sense, what is the revised plan in the Bathware segment? What is it now, the revised expected cash burn annually for FY 25-26? And what kind of EBITDA loss do you expect, given the fact that we are currently in the investment phase of the business?
Correct. So I'll answer that question slightly differently. So annual manpower cost is around 5 to 6 crores. And branding cost is 10 to 12 crores, what we had projected. Post this acquisition, we plan to become more aggressive on branding as well as investments into manpower. And essentially this, helps us accelerate what would take us time organically to build the Prince brand for Bathware, for that channel. With those, stakeholders of the value chain, now we can do that faster. So what would typically take us 4 to 5 years, we are able to do it on a faster basis. And with that in mind, we will become more aggressive in investing in branding and manpower. So our previous estimates I have shared, but now post this acquisition, we will, be going slightly more aggressively on both of those. So maybe in the next conference call for the Q4 earnings, we would be able to give a better visibility of these kind of projections.
Got it. Fair. On the second, the next question was on the capacity utilization. What capacity utilization is the plant currently at? I understand they have balance sheet issues, but still, what is the utilization? It's like, is it like 20%, or is that a fair number or lower?
It would be around 10 to 15%.
Okay. So that is probably the 40-50 crore revenue you said was like 10 years back, right? So currently the revenue should be in the range of 10 odd crores. 10
It would,
to
yeah,
20.
it is 7 crores as of last financial year.
10 crores you said. Got it. And would you also sense, like, I know you said like 35 distributors. So 35 distributors is like a very small number for a geography of south, west, and parts of east. So majorly, given that they have decreased their reach, would it now be right to say it's majorly Gujarat and Maharashtra that they are broadly known in, or let's say the brand is where it's known?
So brand is known across West, Central and South, and we've done our market research, primary market research as well. But you're right, because of their balance sheet constraints, they were not able to supply the smaller distributors, which ideally would have then grown over time and eventually, the way distribution works is, today a distributor can be small, but if you keep supply security and keep investing in brand in those markets, then the distributors in the long run can become big, which is essentially what we are betting on. Once the supply, we are able to give that kind of supply security. So to answer your question, out of those markets, I think their strongest presence would be in Maharashtra, Gujarat, and North Karnataka.
Got it. And just the last question here from my side. This is where is this brand positioned with respect to pricing? Like what kind of a discount does this brand give to, let's say, a Jaguar or a Terra? And where do you see it going forward?
Yeah, that's a good question. And before I come to pricing, I would also like to talk in terms of the brand equity for Aquel is, when it was established in the early 2000s, from a quality and an innovation point of view was actually benchmarked in level with Jaguar, if not higher. And I believe that if they didn't have this kind of balance sheet constraints, they would have been able to unlock very strong value the way the incumbent has. And from a quality and product and packaging point of view, this is at par to Jaguar, if not more.
Got it. So, do you expect there would be distributors and retailers who would know the brand well and who would have discontinued working because there was a supply constraint, and given your visits in the on the ground, would it suggest that people are more than willing to come back to the brand Aquel if the supply is there?
Exactly, because the equity that the brand had earned because of the focus on quality and innovation is strong, and still they command that kind of respect. And I believe, with supply security, we would be able to sort of bring that back to where it actually should be. So I think that kind of interactions with the channel and pumping in money to supply product on time, which actually is not very capital intensive for our kind of a balance sheet, and keeping on investing in the brand, I think this kind of combination is a very unique opportunity which excites us to really able to create significant value and not just be one of the new entrants or one of the also rans in the bathware industry. This really helps us cut through that clutter and be at the very top of the pyramid from a brand point of view.
I was asking just on the last question is on the core business, pipes business, if you could give a sense on how the demand has been through the quarter, and if you think that we've performed better than what we expected in the start of the quarter. That's all from me.
Yeah, thank you. I think demand has been strong. The real estate continues to do well. Affordability in PVC continues, and affordability as well as stability in PVC continues, with any price increase or decrease being extremely range bound, which we foresee for the next couple of quarters. So not only for this quarter, but for the next few quarters, I see demand tailwinds, and which is why we are putting up capacity aggressively in the piping business as well. So we remain bullish on demand in piping as well.
Okay. So last 3 months, have you done better than what you expected in the start of the quarter?
So we had projected a flattish kind of a number basis year on year, and I think we will match the projections.
Okay. Thank you. Thank you so much.
Yeah, thank you.
Thank you. We'll take the next question from the line of Sneha Talreja from Nuvama. Please go ahead.
Good afternoon, sir, and thanks a lot for the opportunity. Couple of questions here. Firstly, I was looking at the financials of the company. In couple of years, the company has been loss-making, plus the revenues is to the tune of 5 to 6 odd crores till FY22 in my view. What do you think that how much time will it take to revive? What was the real reason that the earlier promoters were not able to do so? And what will help you to do so? And what's the kind of a bandwidth it will take away from you?
So one, I want to make it clear that this transaction structure is not an acquisition, it's an asset purchase. So we will not be inheriting the balance sheet issues. We are just acquiring the brand, the land, the manufacturing facility, and the access to the distribution network. Because they had major working capital issues, because of major financial mismanagement, and which only got worsened during the COVID time. They are operating at very low capacity utilization. And you all are aware, if you're in this kind of manufacturing business, be it pipes or bathware, if you're operating at 10-15% capacity utilization, of course you will not be making money. Now all we have to do is ensure supply security, which for them I'm saying may be a challenge, but for us it's a very small kind of capital that we have to deploy just to ensure that the working capital is streamlined and the supply security is robust. I think if there is supply security, the distributors are still actually extremely bullish on being able to increase sales. And not only the active distributors, but some of the distributors that had become inactive because of lack of supply, we would be able to streamline supply to both, as well as to our existing bathware distributors who now get a platform and a brand to really increase. So basically we are accelerating our go-to-market. And like I said in my answer to the previous question, there are a lot of new entrants in the bathware space. And we did not want to be just another new entrant or just another also-ran. And now with this acquisition and the kind of brand equity that it has, which is at par to the incumbent, I think this really helps us to cut through that clutter and be at the very top of the mind share of the various stakeholders, be it a distributor, a retailer, an architect or a builder. This really helps us to cut through that clutter. From a mindshare point of view, I'm very clear there are 3 generations of the family and a very strong professional team across different functions that handles the core business. And similarly, we will have a combination of the family and the professional team to run the bathware business. And the way it has helped us scale the pipe business, we plan to use that same strategy for bathware. So mindshare will not be an issue. It has not been an issue in the past and it will not be an issue in the future.
Understood. What's the kind of overlap in terms of your overall distribution of pipes and bathware at this point of time? And I think firstly this.
So currently, before this acquisition, we have 27 active distributors for bathware, which increases every week. Every day we are adding to that tally. But currently, as we speak, we have 27. So in piping total, we have more than 1,500 distributors. And for bathware today, we have 27 distributors. Before the Aquel.
Which are also doing pipes business with you, right? These are not at all new distributors.
So some would be new, some would be pipe where we are cross-selling bathware, and some in certain geographies where we felt that the existing channel may not be able to justify. We have also opened up new exclusive bathware distributors. So in certain markets like Jaipur, Lucknow, etc., we have opened up new distributors, and in certain markets like Pune, etc., we felt that our existing channel was well equipped and maybe they were already doing bathware, so they had a good know-how of the business. So from market to market, we have taken a decision whether we want to cross-sell through existing channel or whether we want to open up an exclusive channel. So to answer your question, 27 would be a combination of pipe distributors as well as new distributors for bathware.
Understood. And on the current sales of this existing brand, how much of it would be to project